Welcome back, everybody, for another deep dive. We're going to be tackling a topic today that can really help you
Yeah,
level up your decision making,
absolutely.
and that is investment theses and commentary.
Love it.
And before you think this is just for like Wall Street hotshots, let me assure you,
Right.
these concepts, they're incredibly useful for anyone, really, regardless of where you are in your
Yeah,
financial journey, your financial expertise.
exactly.
We've got some really insightful excerpts to kind of guide us today, and I think you'll be surprised by
I think so too.
just how relevant these ideas are to your everyday life.
Absolutely.
In fact, one of the things that I found most interesting is that investment theses, they aren't just about picking stocks or
Right.
bonds or whatever.
Exactly.
They're really about creating a framework for evaluating pretty much A and Y decision, right?
Yeah.
Where you're weighing potential risks and rewards.
It's about making a good decision.
Exactly.
Yeah.
So let's dive in. What exactly an investment thesis?
Sure.
Is this like some complex financial document that only Wall Street gurus can understand?
No, not at all. An investment thesis is really just a roadmap
Oh,
for
yeah.
making informed decisions.
Okay.
It helps you kind of articulate your goals, and it helps you outline a strategy to actually achieve those goals
Right.
and anticipate any challenges that you might face along the way.
I see. So it's kind of like a
Yeah.
structured way of thinking through any important decision,
Yeah.
whether it's financial or not.
Yeah, exactly. And it doesn't have to be, this long drawn out,
Right.
100-page document.
Yeah.
It can be, something that you just jot down on a piece
Yeah.
of paper.
Wow.
It's more about the process and the thinking.
So it's more than just like a gut feeling.
Yeah.
It's really about taking a very methodical approach
Yeah.
to decision making,
Yeah.
right?
Precisely. It forces you to really think critically about your assumptions,
Okay.
to gather evidence to support your reasoning, to consider alternative perspectives,
Oh,
and
mm.
really just, that process, doing that due diligence,
Yeah.
helps you make more confident and well-informed choices.
Right. That makes a lot of sense. And our source material kind of breaks down the structure of an investment thesis into
Yeah.
several key components, and it seems like there's a pretty deliberate
Oh,
process involved here.
Yeah.
Can you walk us through what those components are?
Sure. A well-structured thesis typically starts with an overview of the investment opportunity.
Okay.
This is where you lay out the basic facts and the context.
Mm-hmm.
So, for example, if you were considering investing in a particular company, the overview would include things like the company's name,
Sure.
the industry they operate in, their size, their key products or services.
So it's really like painting a very clear picture up front
Yeah, good
of
stuff.
what you're evaluating, right?
Yeah. Yeah, you want to make sure that everyone's on the same page
Yeah.
before you start diving deeper into the analysis.
Okay. So what comes next?
From there, you would move into the investment rationale.
Okay.
And this is really the heart of the thesis. It's where you explain why
Okay.
you believe that this is a good opportunity. And this really involves both a quantitative analysis, looking at the financial data, looking at the metrics, but also a qualitative analysis. You're
Mhm.
going to consider things like, the company's management team.
Right.
What does the competitive landscape look like? What's their overall strategy?
Right. So this is where you really kind of dig into those details and
Yeah.
try to identify the factors that will kind
Exactly.
of drive success, right?
That's right. And our source material actually gives a great example.
Okay.
They use a case study of a renewable energy company,
Okay.
and the rationale actually highlights the company's competitive advantage in solar panel technology. And they mention, their strong track record of innovation, their
Mhm.
partnerships with key players in the industry. So they're really digging into those details.
That's interesting.
Yeah.
So you're not just looking at the company in isolation.
Right.
You're considering how they fit into like the larger industry landscape.
Yeah.
And is that where market analysis comes in?
Exactly. Market analysis is all about understanding the broader context
Okay.
in which this opportunity exists.
Okay.
What are the trends that are shaping the industry?
Mm-hmm.
What's the overall economic climate? Are there any regulatory factors that could impact the business?
Right. Right.
So it's really about zooming out and seeing that bigger picture.
And our source uses that same renewable energy company example,
Yeah.
and points out that the global demand
Mhm.
for solar energy is,
It's huge.
it's expected to grow exponentially
Yeah.
in the coming years.
Exactly.
And they talk about, factors like climate change concerns, government incentives for clean energy.
For sure.
And that context really helps explain why investing in this particular company
Yeah.
at this particular time might be a good idea.
Right. And understanding those market dynamics helps you assess the potential for growth,
Okay.
but it also helps you identify any headwinds
Okay.
that could potentially impact your investment.
Gotcha. But of course, we have to go beyond the market and look at
Of course.
the financials, right?
Yeah,
At some point, we have to talk numbers.
absolutely.
So how does financial analysis
Yeah.
fit into this framework?
Financial analysis is where you really dig into a company's financial health.
Hmm.
You're going to be assessing their ability to generate profits,
Okay.
to create value. So you're going to look at their key metrics, things
Right.
like their revenue, their earnings, growth, their profitability margins, their debt levels.
Right.
So it's really about understanding their financial track record and
Yeah.
what's their potential for future growth.
So it's like checking under the hood, right?
Yeah,
To make sure the engine is running smoothly.
exactly.
So what are some examples of financial metrics that might be
Sure.
analyzed in an investment thesis?
Yeah, so our source gives us a good example.
Okay.
They talk about the importance of analyzing a company's revenue growth year over year.
Okay.
And this is going to help you understand if they're actually growing their business,
Right.
if they're capturing more market share.
Right.
Another key metric that they mention is the debt to equity ratio.
Yeah.
And that's going to tell you how much debt the company is using to actually finance its operations.
Okay.
A high debt to equity ratio,
Yeah.
that could indicate a higher level of risk.
Okay, so financial analysis helps you kind of separate
Yeah,
the strong contenders
for sure.
from the companies that might be
The ones that are struggling.
struggling a little.
Yeah.
Exactly.
What comes next in the process?
So the next step is really going to be identifying the catalysts and drivers.
And these are the factors that are going to propel the investment forward,
Okay.
that are going to help create value.
Okay.
This could include things like new product launches,
Okay.
expansion into new markets, or even changes in consumer behavior
Right.
that could actually benefit the company.
Right. So you're trying to kind of envision the future and and anticipate what could give this investment
Can give them an edge.
an edge.
Yeah.
But we also have to consider the potential downsides as well,
Oh,
right?
absolutely.
And I imagine that's where risk analysis comes in.
Exactly. Every investment carries some level of risk,
Right.
and a thorough thesis acknowledges those risks.
Right.
Risk analysis involves identifying potential threats
Okay.
to the investment success.
Right.
And this could be, things like increased competition.
Right.
It could be changes in regulations. It could even be things like economic downturns or shifts in consumer preferences that could potentially hurt the business.
Right. And our source actually mentions the importance of considering both market risks,
Yes.
which are kind of these broad factors that
Yeah.
affect the entire market, and then company-specific risks,
For sure.
which are
Very unique.
very unique to the individual company.
Yeah.
Can you give us some examples of those types of risks?
Yeah. So a market risk could be something like, let's say, a sudden rise in interest rates.
Okay.
That can make it more expensive for companies to borrow money, and that can actually slow down economic growth.
Right.
A company-specific risk might be something like, let's say, a key executive leaves
Okay.
unexpectedly, or a product recall that ends up damaging the company's reputation.
Right. It sounds like risk analysis is really all about anticipating potential challenges and kind of developing strategies to mitigate them.
Exactly.
So once you've assessed the risks, what are kind of the final pieces of the puzzle when it comes to crafting an investment thesis?
So the last two components are going to be defining your investment horizon
Okay.
and outlining your exit strategy.
Okay.
The investment horizon is just simply the time frame that you're planning to hold the investment.
Okay.
Are you looking for a quick short-term gain?
Yeah.
Or are you willing to kind of hold this investment for the long haul?
Right. Right.
The exit strategy outlines the conditions under which you would sell.
Okay.
So it could be things like reaching a certain price target. It could be a change in the company's performance,
Yeah.
or even just, a shift in your personal financial goals.
Right. So it seems like having a clear investment horizon and exit strategy can really help you stay
Yeah.
disciplined and avoid making those those emotional decisions
Right.
based on,
The ups and
the
downs.
ups and downs of the market.
Exactly. It gives you a framework for making rational decisions based on your initial goals
Yeah.
and your assessment of that investment's potential.
Right. And then finally, I imagine you would kind of wrap up the thesis with a concise conclusion.
It's just summarizing those key points.
Yeah.
Restating the investment rationale, highlighting any potential adjustments that you might make based on future developments.
Right. So we've gone through all the key components of an investment thesis.
We have.
It's a pretty comprehensive process.
It is.
But I to be honest, I don't think most of us are sitting down and writing formal investment theses every day.
That's
Right?
it.
But what's the real takeaway here? How can these concepts be applied to decisions, beyond the world of finance?
That's a great question, and I think that's what we should delve into next.
Yeah, let's do it. We've been deep diving into these components of an investment thesis, and it's a pretty structured way of thinking.
Absolutely.
But does this really apply to everyday decisions?
Yeah.
I'm not exactly pitching to venture capitalists every time I need to choose a new phone plan. Right?
Yeah, I get what you mean.
Right.
But I think the core principles here
Yeah.
are incredibly versatile.
Yeah.
So let's take your phone plan example, for instance.
Okay.
You wouldn't just, pick the first one you see.
Right.
Right. You'd probably think about your usage patterns.
Right.
How many minutes do you talk?
Yeah.
How much data are you using? You'd compare the different providers. What's their coverage like?
Yeah.
How's their reliability? Customer service.
Right.
And of course, you'd weigh the cost of each plan against the features that they offer.
Yeah. So I'm kind of going through a mini investment thesis process.
Exactly.
Without even realizing it.
Without even realizing it.
That's really interesting.
Yeah, you're identifying your needs, you're evaluating your options, you're assessing the value proposition of each choice, and you're making a decision that aligns with, your budget and your priorities.
Right.
That's the essence of an investment thesis.
Right. And it applies to so many
It really does.
areas of life. Right.
Absolutely.
Okay. I'm starting to see the connections here.
Yeah.
And our source material actually emphasizes that, anyone can use these principles to make better decisions.
Absolutely.
They even, suggest thinking about a big decision like buying a house.
A house, yeah. Buying a house is a perfect example.
Yeah.
Imagine you're house hunting. You wouldn't just, fall in love with a charming kitchen and sign on the dotted line.
Right.
Right? You would think about your long-term goals.
Yeah.
Do you want to stay in this house for 5 years, 10 years, longer?
Right.
You would research the neighborhood.
Yeah.
What are the schools like? What are the crime rates?
Mm-hmm.
How close is it to amenities?
Right.
You would analyze the local real estate market.
Yeah.
Are prices going up? Are they falling?
Yeah.
What's the inventory like?
Right.
So there's a lot of factors that go into it.
And of course, you'd crunch the numbers and make sure that you can afford it. Right.
Absolutely.
All the mortgage payments and property taxes and all that.
You got it.
Yeah. So you're gathering information, you're evaluating those potential risks and rewards, and you're making a very strategic decision.
It is a strategic decision.
Based on, where you are financially and your long-term goal.
Exactly. It's about applying that investor mindset
Right.
to a major life decision.
This is making me think about career choices as well.
Yeah.
Could you use like an investment thesis to decide whether to switch jobs or pursue a new career path?
You absolutely can. Let's say, you're considering leaving your current job for a new opportunity.
Okay.
You could use that investment thesis framework to really assess the potential return on that investment. What are the salary expectations?
Right.
What are the opportunities for growth and advancement?
Yeah.
What new skills will you gain?
But you'd also want to consider the risks involved as well, right?
Absolutely.
Will you have to relocate?
Yeah.
Will you be taking on,
more responsibility?
more responsibility?
Right.
Is the new company, stable,
For sure.
reputable?
Exactly. You'd analyze those factors very carefully, and you'd weigh them against the potential rewards. You might even consider the opportunity cost of staying at your current job.
Right.
What are you giving up by not making a change?
Yeah, that's fascinating.
Yeah.
It's like taking a calculated approach to your career trajectory. So far, we've focused on the investment thesis, which is really all about analyzing specific opportunities.
Specific opportunities.
But we also need to talk about investment commentary.
We do.
How does that fit into the picture?
Yeah, so investment commentary provides really valuable context for making informed decisions.
Okay.
Think of it as a lens through which you can view, the world of finance and the broader economy.
Yeah.
It helps you understand the forces that are shaping the markets and that are influencing investment trends.
So it's like getting insights from experts who are constantly monitoring the economic landscape, right?
Exactly. And investment commentary covers a wide range of topics, from global market trends, interest rates, industry-specific analysis, and even investor sentiment.
Yeah. Our source mentions that commentary often delves into something called a macroeconomic environment. What does that mean exactly? And why is it relevant to individual investors?
So the macroeconomic environment really refers to those big picture economic factors that can impact investments.
Okay.
Things like economic growth, inflation, interest rates, and government policies. And understanding these factors can really help you make better decisions about how to allocate your assets.
Can you give us an example of how macroeconomic factors might influence investment decisions?
Sure. So let's say inflation is rising rapidly.
Okay.
That can actually erode the purchasing power of your savings.
Right.
So you might want to consider investments that can actually outpace inflation, such as stocks or real estate. On the other hand, if the economy is slowing down, you might want to shift some of your investments into more conservative assets, like bonds, to preserve capital.
So it's really about kind of adjusting your strategy based on the prevailing economic winds.
Right. That's a good way to put it.
Okay. What other types of information might you find in investment commentary?
So commentary often provides really in-depth analysis of specific industries or sectors.
Okay.
So, for example, let's say you're really interested in investing in the technology sector. You might seek out commentary that focuses on trends in cloud computing, artificial intelligence, or cybersecurity.
Right. So that kind of, specialized knowledge can be incredibly valuable.
It really can be.
It's like getting a sneak peek into the future of a particular industry.
Exactly. And by understanding the dynamics of different sectors, you can really make more informed decisions about where you want to invest your money.
Our source points out that investment commentary often discusses something called market sentiment. What does that mean? And why is it important?
So market sentiment really refers to the overall mood or the attitude of investors.
Right.
Are they feeling optimistic about the future? Or are they fearful and pessimistic?
Right.
Sentiment can really have a big impact on market movements.
Right.
Because investors tend to buy when they're feeling confident and they tend to sell when they're worried.
Right. So it's almost like a self-fulfilling prophecy.
It can be.
If everybody believes the market is going to go up, it's more likely to happen.
There's definitely an element of that.
Yeah.
And understanding market sentiment can really help you gauge the overall direction of the market and help you make better decisions about when to buy or sell.
This is all starting to make a lot more sense to me now.
Yeah.
Investment commentary seems like a really powerful tool for staying ahead of the curve and understanding the forces that are shaping the investment landscape.
Absolutely. And it's not just for seasoned investors.
Okay.
Anyone can benefit from reading and understanding investment commentary.
So how can we as everyday individuals, access this valuable information? Do we need like special subscriptions or insider connections or something?
Not at all. There are a wealth of resources available to the public.
Right.
A lot of financial websites and publications offer free access to investment commentary.
Okay.
You can find podcasts, blogs, even social media accounts that provide insights from experts.
Right. That's great.
Yeah.
So we've covered investment theses, which help us analyze specific opportunities. We've explored investment commentary, which gives us a broader perspective on the market.
A broader perspective,
But how does this all come together for the average person? Why should we care about all this?
That's the key question, and I think that's what we need to talk about next.
So we've been kind of unpacking these ideas of investment theses and commentary.
Oh, yeah.
They sound really valuable.
They are.
But I'm wondering how they truly impact, someone who isn't managing a portfolio every day.
That's a great point. And I would argue that you are managing a portfolio.
Oh, yeah.
It's just maybe not one of stocks and bonds. Think about it. Yeah. Your time, your energy, your skills.
Right.
These are all resources that you are investing.
Okay, that's an interesting way to look at it.
Yeah.
So how does this investor mindset actually play out in our everyday lives?
So let's say, for instance, that you're deciding whether or not to take an expensive course to learn a new skill.
Okay.
Using an investment thesis approach, you would ask, will this skill make me more marketable? Is the cost of the course worth the potential increase in income?
Right.
Are there cheaper ways to learn this skill?
Yeah, you'd also want to consider the time commitment involved, right?
Absolutely.
How many hours is it going to take to actually master this skill?
For sure.
Is it something I can realistically fit into my schedule?
Yeah.
Along with, all my other responsibilities.
Exactly. And what about the risk of the skill becoming obsolete?
Oh, right. Yeah.
Is this something that's going to be in demand 5-10 years down the road?
It's a good point.
Those are all factors that you would weigh as part of that decision-making process.
Yeah. So it's about taking a much more intentional and strategic approach to how we
absolutely
some of our time, our energy, our resources, right?
Exactly.
And it seems like investment commentary can kind of help inform those decisions as well.
It can give you a sense of, the broader economic and industry trends that could be impacting your choices.
Okay.
So, for example, if you're thinking about a career change, reading commentary about the job market and growth projections for different industries, that could help you make a more informed decision.
Right. That's a good point.
Yeah.
So it's not just about picking stocks.
It's not.
Or, buying a house.
Yep.
It's really about applying these principles to all aspects of our lives, right?
Yeah, our careers, our personal development.
Right.
All of it.
And our source material really emphasizes this idea that, anyone can benefit from thinking like an investor.
For sure.
They even suggest applying this mindset to personal relationships.
It might sound a little unconventional.
Yeah.
But think about it, right?
Okay.
Relationships, they require investments.
Yeah.
Time, energy, emotional vulnerability.
Right. A healthy relationship.
Yeah.
Both parties are contributing.
Yeah.
And they're supporting each other's growth.
Right. So you're saying that we could almost use an investment thesis framework to assess whether a relationship is meeting our needs and supporting our goals.
It's not about reducing relationships to cold, hard calculations.
Right. Yeah, of course.
But it is about being mindful of the dynamics at play.
Okay.
Are you both putting in the effort
to
make this relationship thrive? Are you growing and evolving together?
Right.
Are your values and goals aligned?
These are all really important questions to consider in any relationship, really.
For sure.
And it seems like this approach also kind of encourages us to be more proactive and intentional in relationships, right?
Yeah, rather than just kind of passively drifting along.
Right, exactly.
It's about taking ownership.
Yeah, of our choices and making sure that our investments, whether they're financial, professional, or personal, are aligned with our values and our vision for the future.
This has been such an insightful deep dive.
Good. I'm glad you enjoyed it.
I'm really starting to see the power of, thinking like an investor.
It's a powerful tool.
Not just, in terms of money, but
in all areas of life.
But in really all areas of life.
That's right.
So, keep that investor mindset engaged. Stay curious and never stop learning.
I love it.
Thanks for joining us on this deep dive.
It's been a pleasure.
Until next time.